Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Hump Day. It's August 7th, and we got no economic news releases scheduled for today. So we're just going to jump over to the headline. Again, this can be short and sweet because there's not a lot going on. The stock market is currently down, and why is that? It's still comments that were made yesterday by Fred Evans. The reason why he's having such a big impact is that because they consider him a uber dove, and yesterday he had made those comments. If you didn't see yesterday's recording, he made the comments that he thinks the economy is going in the right direction and that the tapering of the quantitative easing could be happening this year. So a lot of people are kind of targeting September. They're meeting in September. That could be the day where they could start announcing the tapering of the bond purchases out there, or the mortgage-backed securities. So this will obviously be a huge thing once September rolls around when they have their meeting. So all ears and eyes will be right on the Fed when that comes about. But in the meantime, some of these Fed members are out having their speaking engagements and are talking about this, and of course the media gets a hold of it, and the markets are reacting. There's still a lot of investors feel that that we are far from really being that good in terms of they think that there's basically the bond purchases are what's assisting this economy, and thinking that by pulling away too soon that we could easily go in a tailspin. And especially when you look at the jobs numbers, most of the jobs that were created have been part-time jobs, and a lot of people obviously stopped looking for jobs, so you get that large number there as well. So the economy as a whole, by a lot of people, are viewed by a lot of people, still not quite where we need to be in order to be able to pull those back in their minds. So it'll be interesting to see what happens, but again, that's what's going on with the market. So we'll see how this is affecting the bond market as a result. And currently we're actually up. So yesterday we went down. Remember, we had a negative day, but we're still within that range that we've been talking about yesterday. So this week it looks like it's still kind of going that sideways moment, as we mentioned earlier this week. As there's really not a lot of details out there, but this Fed speak is kind of what's kind of moving a little bit the markets, going up and down in the range. So the stock market's been down about 3 days in a row, and right now the bond market is basically benefiting for the downturn in the stock market. So a lot of that money is just going into the bonds right now as safekeeping. All right, folks. So what that means is improvement in the pricing for interest rates. So we got a little bit better pricing today. All right, folks. Let's stay tuned for tomorrow. We got the weekly jobless claims. Tomorrow we'll have to see how that comes out. See if that continues going down, or if it goes up, or if it just plateaus. All right. Thanks for watching. Hope you guys have a wonderful day, and I'll look forward to seeing you guys tomorrow.